On October 10th, 2025, the crypto market was absolutely rocked by a flash crash that just wiped out billions of dollars in seconds. But was it just some random market event? In this explainer, we are going to dive into a source analysis that uncovers a perfectly timed trade. But trade so precise, it really makes you ask a huge question. Was this just incredible luck, or was the whole game rigged from the very start? So let's just start with the sheer scale of the damage here. We are talking about over $19 billion. I mean, that's a number so big, it's kind of hard to even wrap your head around. But in just a few moments, that much value was either liquidated right out of traders' accounts or just gone from the market. It just vanished into thin air. And that, right there, is the million-dollar question. Well, the $19 billion question. How does that much money disappear in the blink of an eye? How can a collapse of this size happen so ridiculously fast? Well, according to the source we're digging into, the answer is a perfect storm of automated tech, split-second timing, and one very, very powerful trigger. Okay, so to really get what happened here, we've got to understand the mechanics of the weapons, so to speak. It's an event that people in the financial world call a flash crash. So what in the world is a flash crash? Honestly, think of it like a digital avalanche. High-speed trading bots, right? They see a tiny price drop and they start selling instantly. This huge wave of sell orders pushes the price down even more, which then triggers other bots and forces traders who borrowed money to be liquidated. It's just this vicious, self-feeding downward spiral that happens in seconds. And the impact in the real world, it's just brutal. You can see it right here. Bitcoin's price absolutely fell off a cliff. Other major coins got completely gutted, some losing 70% of their value in minutes. But this isn't just about numbers on a screen. The source points to a devastating human cost, with reports of financial ruin leading to just absolute tragedy. So what lit the fuse on this $19 billion implosion? Well, according to this analysis, the trigger wasn't some complex market failure. Nope. It was just two social media posts on that Friday, October 10th. The first warning shot comes in the morning. This post from the president hints at a potential tariff increase. And yeah, it caused a little dip in the markets, it created some uncertainty, sure. But this was not the main event. And then the hammer drops. Late that afternoon, a second, much more aggressive post. This time, it wasn't just a warning. We're talking a massive 100% tariff and export controls on critical software. According to the source, this was the exact moment the floor just fell out from under the entire crypto market. Okay, you have to pay attention to this timeline because it's absolutely crucial to understanding the whole story. Look at the sequence here. At 10:57 a.m., you get the first warning. Then at 4 p.m., the New York Stock Exchange closes for the weekend. But the crypto market, it never sleeps. It's open 24/7. And then at 4:50 p.m., just 10 minutes to 5, that second, way harsher announcement drops. The traditional markets were safe and sound, closed for the day. But crypto? It was a sitting duck, forced to soak up all of that panic completely on its own. And this is where the story gets really interesting. The source's analysis shifts gears, moving from a market crash to what feels like a full-on forensic investigation. Because while thousands of people were getting completely wiped out, someone, somewhere, was making an absolute fortune with what seems like impossibly perfect timing. The whole investigation starts to zero in on one specific trading account. Now, according to the source, this account was brand new, opened less than 24 hours before the crash even kicked off. Okay, this table right here, this is what the source presents as the smoking gun. It shows that in the 3 minutes leading up to the president's 4:50 p.m. post, this new account started opening massive short positions, which is basically just a way of betting that an asset's price is going to go down. They were betting tens of millions of dollars that Bitcoin was about to crater. And get this, look at that last entry. The final order fills at the exact moment the post went public. I mean, the timing is just, it's breathtaking. And the payoff for this impossibly perfect bet? A reported profit of nearly $100 million. And that profit was made in the same few moments that $19 billion was being torched for everybody else. While the market burned to the ground, this one trader walked away with a massive fortune. So here's the most crucial allegation from the source. This wasn't just some super smart trader reacting to the morning's news. The entire play, the new account, the funding, the whole strategy, it was all set up before that first warning post ever saw the light of day. This strongly suggests they knew what was coming way ahead of time. The analysis then kind of zooms out, suggesting this wasn't just a one-off fluke, but maybe an extreme example of what it claims is a recurring pattern of suspicious, very well-timed trades by people with political connections. The source then lays out these names as evidence of what it alleges is a much wider pattern. The claim here is that officials and their allies repeatedly made incredibly profitable stock sales right before major market-moving announcements were made by the administration. And, this quote from the source really just hits the nail on the head. It sums up the whole argument. The claim is that the crypto flash crash wasn't some freak accident. No, it was just the most blatant, most perfectly timed example of a system where insiders are allegedly using advanced knowledge to get rich. And so the analysis leaves us with this final, pretty unsettling question. That $19 billion didn't just evaporate. It was a transfer of wealth. So if a select few can seemingly place their bets with to-the-second knowledge of major political news, while the rest of us are left completely in the dark, how fair is the game really? And maybe more importantly, who is it truly built to benefit?